Welcome back. KCB Group, Kenya's biggest lender by assets, has proposed to take over National Bank of Kenya through a share swap to increase its share of the government's banking business. Kenya's banking industry is undergoing consolidation after the closure of two mid-sized lenders and a third smaller one in the months to April 2016 exposed weaknesses caused by corporate governance lapses. KCB and National Bank of Kenya share the same largest shareholders, the state and the state's pension fund, and they have both traditionally competed for the government's banking business, including deposits. In its proposal, KCB, which also operates in neighboring countries, says it will initially take over 70% of shares of National Bank of Kenya before announcing its offer for the remaining stake. It says it would offer shares of KCB to the owners of National Bank of Kenya to complete the deal, but it was also open to all the transaction modes. And back here now to our markets. The Treasury bills market was relatively volatile all through last week as investors navigated positions between auctions and secondary markets. On the average, yield closed lower by 3 basis points across traded maturities. The bonds market, on the other hand, traded mixed through the week with increased activity seen on short-dated securities. Yield came off an average of 4 basis points. Well, it's a new trading week. Let's get a sense of how the market has begun the week. I'm being joined by a fixed income dealer with UBA Group, Oladipupo Adeoye. Good afternoon, Oladipupo. Thank you very much for joining us. Hello, Oladipupo, if you're hearing me. Is it a good beginning for the fixed income markets today? Yeah, we seem to have lost Oladipupo there. Well, we hope to get through to him to give us the details from those markets and, of course, the currency markets. But let's move on now to Zambia. The International Monetary Fund may grant Zambia up to $1.3 billion in a 3-year credit facility to help plug a budget deficit of around 7%. A decision will be made by the IMF board in August. Of course, that's according to an IMF official in Zambia. Africa's second biggest copper producer has suffered from the steep commodity price drop of recent years. Last March, Zambia began talks with the IMF about a potential loan package after agreeing that its budget deficit was not sustainable. According to IMF, Zambia needed to take concrete steps to achieve fiscal consolidation outlined in the 2017 budget, which include improving revenue collection, limiting borrowing, and scaling back on new capital projects.
Yeah.
Well, we seem to have Oladipupo right now on phone. Good afternoon, Oladipupo. Thank you very much for joining us. Now, if you're hearing us, is it a good beginning for the fixed income markets this week?
Yeah, the fixed income market this week, opening today, we saw a little bit of bearish activity, especially on the shorter end of the curve, which is large because of the liquidity in the market. But the expectation is that as we move closer to the on Thursday, expect cash and activity should settle.
Now, primary auction yield is at an average of 18% that's for Treasury bills, and yet subscription has, been below the yield at an average of 21%. Why the low subscription despite the attractive yield?
Basically, what players have been doing in the market is basically to take advantage of the high yield in the market at the moment. So basically what we've been seeing is yields continue to move in the direction of liquidity. So when there are auctions during the time of excess liquidity, we see rates come down slightly. But when there is no liquidity in the market, we expect a higher movement in yields.
Now let's look at the week in terms of liquidity. What do you expect to see?
Sorry, come again?
I mean, liquidity. What do you expect to see? What is your outlook in terms of liquidity for the week?
This week we're expecting over 400 billion in maturities this week, and a net of over 200 billion is on auction for the primary market. So the excess liquidity market should be over 200 billion. However, we still expect the central banks to continue to mop up via HOMO. So net, depending on the extent of subscription at the HOMO, we might still see a liquid market towards the end of the week.
All right. And for your general outlook, what are the expectations? There are going to be CBN auctions in the market
the general sentiment is that the market should close slightly bullish towards the end of the today. We're
All right. Thank you very much, Oladipo, for those updates. Let's cross over to the FX market for an update on the Naira-dollar trading. I'm sure we have Femi Akinyemi, the FX dealer with Access Bank, join us. Good afternoon, Femi. Thank you very much for joining us. Oh, we seem not to have him. Well, let's move on now to Tanzania. The government there has signed a $154 million contract with the state-run China Harbour Engineering Company to expand the main port in the commercial capital Dar es Salaam. Tanzania is seeking financing for infrastructure projects as part of its plans to transform the country into a regional transport and trade hub. Under the contract, funded by a World Bank loan, CHEC, a subsidiary of the state-run China Communications Construction Company Limited, will build a roll-on, roll-off terminal and deepen and strengthen 7 berths at Dar es Salaam port. Tanzania hopes expansion of the port will increase container throughput to 28 million tons a year by 2020 from around 20 million tons currently. And Mauritius, the foreign direct investment there fell 32% year-on-year in the first quarter of 2017 to 2.04 billion rupees due to a drop in funds going into real estate and manufacturing. Data from the Bank of Mauritius says investments into real estate fell to 1.87 billion rupees from 2.39 billion rupees in first quarter of 2016, while that into manufacturing fell to 93 million rupees from 378 million rupees. Nearly a third of the direct investment inflows originated from France with 722 million rupees, while those from South Africa and United Kingdom amounted to 285 million rupees and 185 million rupees each. Famed for its white sand beaches and luxury spas, the Indian Ocean island nation is diversifying its economy away from sugar, textiles and tourism into offshore banking, business outsourcing, luxury real estate and medical tourism. On that note, we wrap up today's edition of the program. Thank you very much for watching. I'm Chimize Obi.